Hey, Anatoly, welcome.
Thanks, Vinny. How are you?
Good to see you, man.
Yeah, likewise.
Let's hope you've been getting some sleep lately.
Yeah, for sure. But I see you have like a nice COVID beard too.
Yeah, right? You know how much money we've
Yeah.
saved on raises this past year? It's insane.
Yeah. Yep, exactly.
That's cool. Well, welcome, Anatoly. I've just been chatting to the Civic community. I'm sure there's a whole bunch of people in the Solana community as well, and really excited about the news today. And as I've been saying, we did a whole like view of the ecosystem around layer one solutions, and we picked Solana in the end for many reasons. Cost is one, but I think speed and speed of finality of transactions was a huge part of it, and how fast Solana is. But before we get into that, just want to maybe break the ice to the audience. Like, tell everyone about how we met.
This was like right when I was raising seed funding, and before I had really any commitments from any like investors. I was, I was going one meeting after another looking for that first big check. And I have a common friend with Vinny who plays underwater hockey. So this is kind of like this weird sport, that small community is really how I got my start. But I was connected to Vinny, and he connected me to Kyle and Multicoin, and they're really our first big champion, and got us over the hump and got us funding, and have been really critical to our success for the last 3 years.
It's been great, and I remember the day Anatoly walked into my office, and like so David is the guy who introduced us, and I invested in his company before that, and he's like, Vinny, you know about this blockchain thing. Can you go and this guy named Anatoly, Yakovenko? And I'm like, dude, a Russian blockchain guy? Imagine that. So I was like, yep. He came in and he's like, okay, I got this like crazy idea. And after chatting to Anatoly for like 10 minutes, I'm like, actually, he's onto something, because I was very skeptical at first. And I was very impressed with Anatoly's knowledge. And Anatoly was ex-Qualcomm as well, so he really got he got a good sense of the tech stack, from basically like low-level code all the way up to building out a global product, and he's done really well. So I've been excited about what they've been doing since the beginning. So
I actually thought that, like, go ahead. I thought at the time that everybody would be kind of following, like building the exact same design, kind of like betting on hardware and trying to solve the problem the same way. There was actually like a proposal out of Intel called POET, Proof of Elapsed Time. They used SGX. To me, it seemed like all the hardware people were thinking the exact same thing, but there were like, only one team that actually went for it.
There's nothing more powerful than an idea this time has come. So like, I was excited about it when I saw it, and we had lots of lunches and dinners and sushi in San Francisco, debating on where Solana's going to wind up. And I don't think Anatoly would have thought it'd be this far this quickly as well. So, but it's been lots of sleepless nights from what I know about what's going on in the background. So, to be fair, like I've known Anatoly since the beginning of his journey, and I've just been super impressed with how they've executed, and I'm a supporter. And that said, I think the technical team at Civic did an independent review of things and looked at all the solutions out there, and they also came to the same conclusion that this was the best solution for us. So I'm excited about that. So, Tony, tell me about what has it been like for Solana since September? Because like Civic, we launched our Civic wallet in June, July-ish, and the fees went nuts on ETH in September. So what has it been like for Solana as an alternative layer one solution?
I think kind of like I kind of see two things happening. One is that like there's a bunch of entrenched projects in ETH with users that are ETH denominated, and they make more money when prices go up, because even though gas fees go up, volumes go up, prices of all the assets that they trade go up, and they don't really care. They don't care that that gas costs $300 when they're making $10,000 on that trade. And this is almost like the the ETH success is its own kind of like detriment right now, because I think it's obvious to everybody that there's product market fit for these ideas, and these ideas can be scaled to a very large consumer base, but there's no way to do this on Ethereum. And what's been kind of, like, I guess this is our advantage, that we actually have, the ability to scale to a very large user base. So folks that have vision outside of, I need to make money trading in Uniswap with other folks that hold ETH, those products that are looking for general product market fit, we've been able to, talk to all of them, right? Like we effectively, like, I think the market is fully open to onboard those folks to a layer one like us and to help them reach 1 million people or 10 million people. Audius is like one of my favorite examples because they're chain agnostic. They have a token on Ethereum. They have parts of it on POA. Parts of those parts that are in POA are migrating to Solana, and plus new features are being added that are completely consumer facing. None of the stuff is anything that like is even remotely on the roadmap on Ethereum. But if that application wants to stay decentralized and wants to build these like richer environments, like we're the place to do it. And this is what like my vision for blockchain was, that if it's fast enough, right? Like if we can actually make this thing fast enough to scale to 10 million people, 100 million people, then like all the stuff that we see that's, kind of like the negative effects of big tech that's poisoning like kind of our environment, we can remove all of that and do it in a trustless, decentralized way. So I'm really excited about the next 5 years.
That's great, Anatoly. Thank you so much. So, why do you think Solana is the right platform for DeFi? I mean, you touched on it before, but the key aspects of it, like what do you think makes it better for DeFi than Ethereum? Obviously, fees aside.
This cheesy slide deck that said that Solana is blockchain and NASDAQ speed. And this was because what I envisioned was that if you have this like universal supercomputer, right, that's distributed around the world, it's by definition a price discovery engine. Like as like an engineer, you can kind of mechanically visualize that there's a bunch of memory. That memory is just arbitrary bits. And if I can send a cryptographically signed message that extracts money out of those bits, I'm going to go search this like space, right? Search the solution space for free money and go do that. And that is effectively arbitrage. This is what market makers, what hedge funds do when they observe information around the world. They figure out all the prices between all the assets, calculate the risk engines, and then try to extract free money from trading, right? So if arbitrage is possible in the system, then it's by definition kind of a very fancy price discovery engine. It's programmable. You can write all these crazy new like style financial products and plug them in and scale into millions of people, right? But by definition, this is what it does. So my theory was that we can, because we have this kind of unique approach where we have this clock that's outside of consensus, we can in theory approach the speed of a state transition, like a message that propagates through Solana is going to move as fast as news through fiber. Speed of light through fiber is the speed of news. Some event happens in Hong Kong, that information travels to a Bloomberg terminal. That trader should see that price already reflected at the New York Stock Exchange or in a market running in Solana. And if we can achieve that kind of parity, that means that we can be competitive at New York Stock Exchange and all the important trades. Like an actual newsworthy price moving like information trades, we can compete with them. So this was what I was thinking of, like price discovery. It wasn't even called DeFi at the time. But that's basically like, like we got really lucky with the folks that introduced us to Serum, which was, Multicoin and like Edith and Chris McCann from like 500 startups. They like helped us get in touch with FTX and Sam, and he's kind of like a visionary that looks much bigger than the Ethereum. His vision is much bigger than Ethereum, and he kind of had the same idea that like if these systems are fast enough, if that's possible, maybe not 50% of the world's finance can run on it, but maybe 25, and that's a big enough, that's a big enough vision, like market, that it's worth like doing something interesting. So they never really wanted to build like a Uniswap knockoff, right? They wanted to do something that was impossible in Ethereum, and they were looking for a blockchain that could do this, and we were the only ones that actually were live and could demonstrate that performance and had, the roadmap to scale it. And that roadmap is, hardware is going to get twice as cheap in 2 years and twice as powerful, and Solana is going to get twice as cheap and twice as powerful, because all we're doing is like horizontal scaling. We're trying to squeeze out every bit of silicon we can, and provide it to users.
No, that's great. It's a fantastic viewpoint on how this plays out. I couldn't agree with you more. I think one of the problems I've had in the past with even Bitcoin and Ethereum is the scalability of those systems in terms of TPS. I mean, Bitcoin's 7, I think Ethereum's like 15. It's really great if you have whales doing large transactions and creating liquidity pools but when the whales go away, what do you do then? And I've always been a fan of bottoms-up liquidity, where if you look at how Robinhood and small traders actually provide so much liquidity to the market now in the traditional financial world, in sort of centralized finance. In decentralized finance, we really need millions of people transacting, and even if they're doing $5 or $10 or $50 trades, that if you add up enough for those people, that's more liquidity than what the whales can provide. And so markets are far more liquid when you have more broader participation, even at smaller amounts. And this is why cash is such a liquid market, right? How many cash transactions are there a day in the world? And they're all zero costs, right? Cash is a feeless transaction globally. And so cash provides massive global liquidity, but obviously it's very isolated to certain markets. Every country has its own sort of fiat currency. But the same principle should apply elsewhere. If you want liquidity, you want to have lots and lots of small transactions. And this is where Visa and MasterCard breaks down, because they have really high fees on small transactions. So if you're like, most merchants won't accept a credit card for $5 or $10, the fees are too high. But cash fills that market pretty easily. So I agree with you. And I think if we find that 25% of the global finance market became, in DeFi, we know that Ethereum can't handle that. It's just not, like, the way it's designed right now. It can't. Maybe as a layer 2, but not as a layer 1. And there's you and I think in the first conversation, we had this really great conversation about layer 1 versus layer 2 scaling. And I think layer 2 has its place. I just don't think it's for the sort of global computer market that we're trying to build. And so let's touch a bit about identity. And we've always believed that identity is a cornerstone of blockchain technologies, and decentralized identity anyway should be. How do you see identity and DIDs and the stuff we're doing fitting into the Solana ecosystem?
Just trading. I think like the kinds of marketplaces that exist, like what's going to stop blockchain is like the entrenched members like New York Stock Exchange, CME, just constantly throwing mud at it that it's scammy, it's not like following regulation, et cetera, even if that's total BS. This is what's going to stop the adoption of these technologies. And if you have cryptographic identity where we're not leaking private information, but we're leaking like attestations that are like guarantee that I can trade with the other person in these markets. If we can do that, that means that there is really no moats for these entrenched players, right? Like there is really no reason why somebody that is actually doing price discovery, that is doing all of this like massively complicated information gathering and computation to figure out that an asset like Tesla at this particular price point should have this much at risk, right? That's the hard problem. If they can spin up markets that guarantee that they're compliant to whatever their like, compliant folks want, that means that there's no moats. And to me, this is kind of like in that kind of primal use case that we're focusing on, which is, blockchain at NASDAQ speed. I think that could really rapidly change like the landscape in traditional trading. this is where like, you see like these small baby steps, and then things happen all of a sudden, and like volumes shift dramatically from, CME, New York Stock Exchange, to a decentralized platform, which has almost no fees. And the people that want to create those markets are able to do so with like, the cost of a few bucks to spin up, a smart contract. That to me is like kind of one of those massive opportunities. In the long term, I think like what was super interesting to me was that like in DeFi summer, it wasn't so much that there were like a bunch of, new discoveries in terms of like algorithmic stablecoins, but there were really massive formations of people like rapidly forming around like an idea. It was almost like 6 degrees in the 90s. I don't know if you remember this, but like you would get like an email that said like, hey, you're like 3 emails away from like somebody famous. And it was dumb, right? And like I didn't know that was going to end up being Facebook, right? Like you kind of don't see the vision of that. But I think right now what we saw in DeFi summer were like 10, 20,000 people max forming around an idea. Well, imagine scaling that to 1 million, to 10 million, and organizing those folks, and then being able to prove like identities within those communities, and then like rapidly mobilize and take action, right? Like we don't actually need to have voting for our representatives on blockchain. We just need to be able to organize, and then have like guarantee that the people we're working with are actual humans, like in the United States, and then we can all take action collectively. And this is like, I think, 5 years from now, but everything in crypto moves at like napalm speed, right? So who knows? Like I feel like if you have 1 million people organized like on blockchain that can actually have like proofs about who they're talking to, I think that's massively transformative. I mean, those social networks are gonna blow away Facebook out of the water, because they have no like, there's no reason for them to have advertisement, right? There's no reason for them to poison those communities. They're truly like collaborative, for community only kind of networks, and the mutual aid networks is like another term for it. So I'm super excited about this, like in the long term, where these kinds of features are scaled to 100 million people.
Yeah, no, that's great. Thanks, Oli. So what do you think about commercial capital and corporate capital coming into AMMs, right? Like, do you think that they're going to go into dark money pools, or do you think identity and KYC plays into that?
I think like this is like kind of above my pay grade. I don't know enough about that space like to really understand how it works, but it seems like it seems like most folks have like figured out jurisdictions where they can operate and have like parts of their companies there, right? But that doesn't mean that like more traditional or larger portions of capital can actually enter that, right? They're like ways to test, like, do these markets work? Is there a way for us to make profit? I think if you have like clear open marketplaces that are like regulatory compliant, like within the United States, then all the money that's sitting in the US can participate in those. You don't have to like move parts of it offshore. So there's like a ton of friction, obviously, to like figure out how do I like, split my company in two and have like separate teams working over there. Like, I think that friction is definitely preventing like bigger players from participating like in these marketplaces.
Yeah. So I mean, you look at Tesla, for example, and MicroStrategy and a few others. They're buying all this crypto. How do they get a yield on it, right? They're gonna have to put it into an AMM somewhere, and like they're not gonna go just dump it into it's some random unaudited smart contract, or they don't know who the counterparty is, or whatever risks they're having to deal with. So I guess like that's really the thinking. As crypto moves onto corporate balance sheets, corporates are going to look for places that they can basically get yield in the DeFi world, and that's why I think Solana is interesting. Obviously, for all the reasons we mentioned, because at that level of scale, there's going to be a lot of smaller people looking to, hey, listen, I'll work on the other side of the equation, and because it's large amounts, right? Like, not many companies can be the counterparty for $1.5 billion worth of Bitcoin, or two, whatever. It's right now.
For sure. Yep. I think like to add to that, I think like what's exciting right now is that you can have like small teams that can basically take these features like identity plus circle APIs and create like the equivalent to what a bank provides. But it's just two people and that build a front that just talks to APIs and a couple smart contracts. And like the coolest thing about DeFi is that if you have like these markets like Aave, lending protocols, the folks that participate in that bank can earn yields that are much, much larger than what you can out of Bank of America, right? Like you're going to get 0.01%, if anything, right? Right. Like when I think like you can realistically get like 8 to 20% like risk free in a smart contract right now, because the space is so like kind of thirsty for lenders. Like there's not enough capital to borrow, and this is why the yields are so high.
Yeah, I totally agree. But again, it goes back to the other problem is like I think part of the reason why these yields are so high is that only big players can participate right now with gas fees being so high. And so this is why if people could put in $1,000, I mean, imagine putting $1,000 in, paying $50 in ETH to earn 5%. Like the math doesn't make sense. And so this is the problem right now, is that the fees are basically forcing these rates to be high because only whales can participate and mass capital can't come in. And that's what Solana changes, because if we can move and build AMMs on top of Solana and even bring KYC and identity to some of them, like not all AMMs will have KYC or identity built into it, but I think it's more important that you get lots of small players participating and not just the whales to increase the liquidity pools.
Yeah, for sure. Yeah, I couldn't agree more.
So guys, there's 141 of you out there. I'm sure 143 right now. I'd love to see more questions coming for Anatoly. So join the queue. I'm going to resume quickly and see what Mumtaz wants to ask, and he's still there. But please join up and ask some questions. There you go. Hey.
Hello. Hey, Vinny. How are you? I'm Mumtaz from Vancouver, Canada.
Nice to meet you.
Nice to meet you as well. So Vinny, my question was regarding since you did so now you're moving to Solana, but don't you think like if you would wait to Ethereum layer 2 solution like that, so what if like once the Ethereum layer 2, like the updates that they're doing by the end of this year or beginning next year, that's what they're saying. So then, I mean, the fees they are doing, what they're doing with their layer 2 solution, the fees will decrease and also it will be faster. So what's then the point to move to Solana?
So do you believe in engineering timeline that says it's going to be done in end of the year?
I'll let Tony give a more detailed answer to it, but I want to start off by saying the one lesson people in the crypto community are going to have to learn is that markets don't wait for engineers to be ready. Okay, markets move, and you have to adopt whatever technology is available at that time to go with the market. You can't wait for solutions which may or may not be on the timeline. But Tony, go ahead.
Like rollups only solve like the execution problem, right? In terms of like how much like physical compute that any block can take, but there's still limited space, right? So that limited space is not enough for a large number of users. So you can solve some of those problems with zero knowledge rollups, but even there you're dealing with like still large proving times and long aggregation times. So if you're building like a consumer facing application that needs to wait 30, 90 seconds, right, for that user to know that their event is settled, that's a much worse use case than something like Solana where you get finality in like 1 to 2 seconds. In fact, there's a couple teams building equivalent to optimistic rollups. I think we'll probably end up calling them optimistic sidechains on Solana that execute EVM, the Ethereum VM, as a smart contract in Solana. You know, timelines and knows, end of the year, right? Who knows? There's a big pile of stuff that needs to be done. But in that world that works, a transaction that's optimistically finalized on Solana and then eventually settled on Ethereum can be like, you know, imagine there's an AMM that's running in this environment a trader can trade in that AMM in the same atomic transaction and take a position in Serum to hedge it. So it's actually state that's settled on Solana first, which is pretty cool. And that really pushes, like Ethereum as like settlement layer, and that's great. Like settlement is one of those things that I think Ethereum is great at, but execution and like actual like doing price discovery and like doing that, really fast response time to users. This is where we excel. And, in 2 years, we're going to have twice as much hardware to do it.
Thanks, Tony. Yeah, and look, again, to your point, like I don't think that I think the timelines for ETH2 are very optimistic. And secondly, even if they got the timelines right, I think the cost savings are also very optimistic. I don't think we're going to get Ethereum down to sub 1 cent or even single-digit pennies per transaction anytime soon. And so that's going to be a concern, I think, for us. And in Civic, we can't wait for end of the year for maybe it's going to be scalable, maybe it's going to be cheaper, maybe it's going to be economically optimal for us as an organization to operate on. We can't wait. We got to go right now. And that's one of the lessons that we have to learn in tech is that like markets don't wait, markets move on. And so as a company, we've had to move on. Evan, welcome back.
Hey, this one isn't for you, Vinny, I promise. I've already bothered you enough. Anatoly, thank you so much for making the time to come on. We are considering an ICO within the next 24 months for a coin that we would use that could basically be used when you go to scan a code that gives you a promotion. So our app, right, we allow businesses, bars and restaurants to create promotions. Users find that on their device via a map. They go in, they get a QR code scanned, they get a deal. We don't do transactions or anything like that. And we're considering launching a coin to reward every single code that gets scanned for the individual scanning it, the business, and the individual at the business as a form of a tip. Is this something that you see as being scalable on Solana? Because we haven't gone forward with our plan with this because Ethereum is so expensive, as Vinny has mentioned.
Yeah, those kinds of transactions are totally easy to support. So like an application like Audius, what they're using Solana for is tracking like music plays. Like whenever somebody plays a song, there's like a transaction that hits the network. So at that, like they have 3 million monthly active users, so it's cheap enough for that. Like, and the, like, I would, as Vinny has heavily like influenced me, build a product, get users, then launch the coin. That's like the best path. Like it's actually like go hustle for product market fit, like work as hard as you can to like iterate on that. And where tokens really accelerate things is when you're at that, like I have 300 fans that like love this product, like 1 to 200, like 1 to 300 people that are already committed to using this thing and love it. And this is where like a token release like a Uniswap accelerated them, right, to like have volumes greater than Coinbase because they waited, right? They actually had users that like loved that product. So that was like kind of advice that came from every VC in the space and a lot of folks in crypto didn't listen to, but a lot of Silicon Valley folks always tell you get product market fit first, everything else is easy after that.
Yeah, I think other bit of advice I said to you back in the early days in the bear market is you're never going to get this much time to make sure that the base layer infrastructure of your product is good. So I remember this, I think it was Sushi at Osumo or something, we were having this conversation around optimize everything you can right now, because once you go live, you're not going to have time to refactor that code. And I think you did that, right? That was a big part of what you guys focused on. Even though other people would like trying to say, hey, go market this and get, Sorry, is there someone?
We heavily focused on making sure it works and then making it as fast as possible. And there's still like infinite amount of work left.
Yeah, no, so that's great. It's been a good journey to watch how the thesis has played out around Solana, and I think Solana is easily one of the top 3 or 5 challenges to Ethereum right now. And different use cases will come up to different conclusions. For identity, we came to the conclusion that Solana was the best, but if you're doing a different type of project. You may think that, you know, one of the other layer ones is a better option, and that's fine. And that's the beauty of the market, right? The market will choose, you know, based upon need and utility. So, but we're excited. And Anatoly, thank you so much for your time. We've got like a minute or two left. I don't think there's any more questions coming through, but I really enjoyed having you on this AMA. We're excited to be, you know, in some ways merging the Civic sort of community and the Solana community in one, to like, you know, really cheer on the sort of collaboration between our two platforms and what we can do together. And I personally think this is the start of more companies moving from Ethereum to Solana and other layer ones because of the cost, which is kind of good for Ethereum in a sense, because it takes the heat off Ethereum, and it actually makes Ethereum is a great test bed for new ideas and new things. And so the real question is, like, if you get to the point where your, you know, whatever new industry merges on Ethereum can't scale, where do you go? But Ethereum will always be the leader, I think, in terms of the network of people testing out new things. I call it, it's a great test bed. I don't think it gets to scale for low transaction fee products anytime soon. Maybe with rollups, but I'm still skeptical that happens anytime soon. And I think by then Solana, my prediction is Solana is easily going to be one of the top, you know, probably I would say number 2 or 3 by the end of this year in terms of smart contracting platforms and with scale. Like, you know, it'll be Ethereum, Solana, and someone else, I'm guessing. And that's just me being optimistic. That also means
it's all to the hard work of like the folks building on top of it.
You know, it's a community. I think the community in Solana is fantastic. It's a great community, and everyone look. Solana attracts people who see the importance of something like 50,000 transactions per second. How important that is. That's a key thing for Solana. And you'll find that people who go to the Solana community want scale. So if you want scale, Solana is the place, I think, where you just gravitate towards, and then you find other like-minded people who all agree that this is how it plays out at scale. But, you know, I'm not ragging on any of the other communities out there, and I think Ethereum is great for lots of different things. But we're going to Solana because we want to scale, and we think it gives us the best chance. So I want to thank everyone who's come and joined us for the past hour. Thanks for your questions. Thanks for participating. Thanks for helping the Waitroom team test out Waitroom. And any final thoughts, Anatoly?
Awesome to have you guys to run and deploy in Solana. That's really cool. I think like the possibility of the kind of new composed markets that we can do with identity and with like very large token user bases, I think are really interesting. So I think like the next, like, you know, iteration of social networking marketplaces are going to happen, you know, in large part thanks to you guys.
I hope so. Well, thanks, Tony. Appreciate it. Always good seeing you. Thanks, everyone.
Thank you, guys. Take care.
Cheers. Bye.
Bye.